Hey folks, Nick Shaheen here looking at Palantir, but not so much as to how to trade it, although at the end I will give you like proof positive of what's going to happen. So this video is an educational video, and which gives me an idea. So you've been watching my videos a while. First of all, subscribe to the channel if you're not already, and I'll tell you why. I'm going to create an education channel hopefully soon enough, as soon as I have time. I'm busy with the chat room, for which I have a link down below. And this lesson came from a discussion just now in the chat room based on Palantir and somebody that owns the stock and is confused as to how to manage it going forward. So, but here's the messages. I'm going to have a paid channel for YouTube that's for education only. So look out for it. I don't know when I'm going to launch it. Just start looking out for it. And stuff like this will be in it, which will be trade setups. If you're in the chat room, don't worry about it. You get everything I write. But this will be somebody that doesn't want to deal with the chat room or the write-ups or anything. They can just subscribe to the channel. So the dilemma that this person has is they like the stock long term, but they're trying to swing trade it in the middle. So they want to short it and long it, short it and long it in between. Doable, totally doable with a stock like this because it has excellent fundamentals. It's not cheap. It doesn't need to be cheap. It's still a startup. And well, not quite. I think 2014. But they have a book of business that's over 1.2, 1.3 billion. They have segments for the government, segments for the commercial side. They're in artificial intelligence, and they make things happen. So they're in the right spot, doing the right things with the right team. You can't short it. If the markets are higher in the future, this stock should be doing better than now. So they hold 2,000 shares already. They're missing 500. They're waiting for a dip to buy another 500. Their goal is to have 2,500 shares. What can they do in the meantime? So I'm going to address two concepts, and that's the lesson today. Before I go into what the chart is going to do, and I'll tell you at the end exactly what it's going to do, step by step. So the two concepts are how to deal with that extra 500 that he's looking to get into, and how to deal with the 2,000 he has. First of all, owning 2,000 things, that's an asset. I can put it to work. How? I can sell covered calls. So one major caveat on that. Selling covered calls is not for everybody, although it puzzles me for people who choose not to do it. Some people, I deal with, 500-600 people a week on a consistent basis of all year long. So I can guarantee you that more than 90%, if not 95%, of all covered call conversations are like this. Nick, I'm in trouble. Help me. I go, what's going on? I sold the covered call and send the money now. I'm like, how is that trouble? Your worst case scenario is profits. That's not trouble. I wish all my troubles were like that. But some people cannot see their stock getting called away. When I sell a covered call, there's a possibility somebody says, hey, you're going to sell me those shares higher. And I'll go through a specific example, and you tell me if it's doable or not, all right? So that's the one part, dealing with the covered call situation. That's how I put my 2,000 shares to work. It's like they create a dividend all by themselves. That's pretty sweet. How about the 500? How can I get into the 500 every week? Well, I can get paid to hopefully get into them every week. That's one way of dealing with it. So how often do I do that is up to my personal preference. And luckily, the options platform, this is E-Trade, Praxis account. Do I recommend it? Not really. I mean, it's good for setups, but it doesn't work well all the time. It has bugs, and on busy days, forget about it. It goes stupid. All right, so I'm going to go to January contracts. So these have 240 days on them. So that's basically for the rest of the year. It is 5:28 today. I don't know if I said that. There's an hour, 40 minutes left in the market. So if I wanted 500 extra shares, I can get into them now. How? I can sell a put. Every put I sell gives me 100 shares. Maybe. Okay, so when I sell something, put or calls, I'm handing somebody control. So who's buying the put? Who's doing this? Somebody's buying the put. It's green. I'm selling the put. So there's another side. They are worried about their shares. They want to get out of their shares at $17.50. I'm obliging. I'll buy them. They'll pay me insurance. This money goes into my account. $160 per contract times 5 goes into my account. No money leaves my account. I open the trade. I'm bullish Palantir. I want to buy it at 17.50. I get paid $160 for every 100 shares I commit to. Do I need to commit to 500? No, I can do 100, 200, 300. So this money goes into my account. For the rest of the year, if it drops to 17.50, maybe I will get assigned shares. So the put itself is a trade on my books. It may show losses on bad days. It could be 1,000%. Don't give a rat's ass about that, because I want to own the shares. So you can show me 1,000,000,000% losses. Don't care. All I know is I'm going to buy the shares at 17.50 maybe one day. And I got paid to do it. My break-even point is $16, a little bit less than that, because I collected $1.60 per contract. So I'm okay owning it at breaking even at 16. That's the worst case scenario. And then if it falls below 16 and I still don't sell the shares that they give me, then it's losses thereafter. Just like owning shares, except I avoided the whole drama. So now I'm long 2,500 shares, 2,000 via owning, 2,000 via promise to own. 500 via promise to own. So what about the calls? Okay, so if I wanted to do the call side, the covered call side, I'd be selling calls, and I'm going to use this one just randomly. That's not the one. By the way, I'm not recommending this trade. I'm just giving an example, okay? And it's not even my trade. This is not a recommend. I would never sell a put if I don't want to own the shares. This person wants to own the shares. I am answering this person's question. Okay? This person wants to put 2,000 shares to work, and this would work for them, not everybody else. And this would not be the blind one. Maybe it is, maybe it isn't. I'm not saying at this point, okay? So, but this illustrates the concept of putting assets to work. So they have 20,000 shares. They can do this 20 times. So it's 20 times 100 times $1.40, I'm rounding. That is the amount of money they collect today for selling that call. What do they promise in return? Because they give up control. They promised that they would deliver shares at $37, which they own. So it's not like they're shorting outright. They own those shares. So all they have to do is, if price rallies to 40, they have to sell them at 37. They profit from 20, their base price, up to 37, and they keep the $1.40, the pile of money for that. So their break-even point is $38.40. And they missed out on the last $1.60 to 40, if those were the numbers. Big deal. So, but what happens is, price rallies, this trade goes to 3 or 5, shows 1,000% losses, and people panic. They buy it back. They realize the loss, and now what they're trying to do is make their position better, and now they took away from their profits. Why? Let it go. Let it go. You can buy the shares back. And if you're that broken up about it, I would roll it up and out, meaning you book the loss, but you reopen it somewhere else to be right higher out in time. So those are the ways I would trade that stock. The concept. Those were not recommendations. And here is the actual. You see this little funky thing? I just did it because that's the second time I recorded this, and I did this live. So anyway, so my point was, somebody who bought the calls today, now we're talking chart, does not know charts, because that is an exit point for me. In fact, today I exited some longs. I'm still long the Palantir, but I sold short puts, but today I would exit calls. If it dips, when it dips, which it already did, it can find support anywhere here. I would sell puts and put spreads on the dips because I believe in the stock long term, and that's another way. And then as it comes back, if it breaks through here, now you have an inverse head and shoulders. It's going for a rally. This upside pattern, I placed it not blindly, based on this. I placed it here, and if I look left, look how it matches up here. So this is a complete look on Palantir and helicopter strategy as to, is it red today? Wow. Thank you, AMC and GME. God, what a colossal mess over there. I cannot believe the SEC is letting that happen. It used to be illegal to manipulate stock prices. Apparently now it's cool, because all the cool kids are doing it on social media. So Palantir, good company. If I own shares, I want to add shares, I'll sell puts for the balance. as many times as I can. If I own shares, I'll put them to work by selling covered calls. If I don't know any of these, I shouldn't do either of these. I would never sell a put naked without wanting to own shares ever again. Not again, ever. I would never sell a naked call ever, not ever. I would never sell a covered call if I don't intend to get rid of my shares. So you're saying they won't do it. As soon as you sell something, put or call, the buyer can exercise their right at any point in time. That's something that 99% of options traders do not know. Price does not have to be at or above or below the price. So the call or the put does not have to be in the money for them to exercise. They can do it at any level. They can do it now, even 10% away. They'd be idiots, but they can. All right, Nick signing out.